Everyone and their grandma's been talking about AMC. You can absolutely not go anywhere without hearing anyone ask about AMC this past week. So we're going to go over some technical, fundamental analysis, also give you some predictions on what's going to happen for this week before you risk any of your money taking a trade or investing in this stock this week. Let's go. All right, guys, welcome back. My name is Cruz. I'm the founder and head trader at NewAgeWallStreet.com. Before we get started, make sure you hit the like button and subscribe if you get any type of value out of this video here today. Let's get right into it. We're going to go ahead and talk about AMC. Is it a short squeeze? What's going on? Everyone, there's just so much information and so much misinformation that's out there. I want to kind of put some facts out there for you guys to go ahead and consider if you should put your money into it. So I know everyone works very hard for their money, and you want to make sure that you're making a good investment. So I'm going to give you some facts and leave you at that. I'm not going to try to give any type of opinions on this. Just going to give you straight facts of what's going on and what I see for AMC this week. All right. So we're going to go ahead and flip right on over. All right, guys. So we're going to go ahead and take a look. This is AMC and the way that it was going here this week. So we got. And I guess we can't really talk about AMC without bringing up GME real quick. So you guys know this is where it started with the short interest in GME. And then there was some players that came over into the AMC trying to run this up on the short interest as well, right? So we got this huge move. We had this move here from the $4 all the way up to 25 in pre-market here on Wednesday. And then as most of you know, Robinhood started restricting shares and wasn't allowing free trading on the actual market, right? So going into this week, I want you to look at a couple different things going into AMC, okay? The first one is whenever this traded and it went into this 16 level, it got rejected very, very hard. So if I come into like this more like 15-minute time frame here on the chart, you can see right here where it got up to 16, it got slammed down. Right here in pre-market, slammed down. Right here on Friday, slammed down as well, and also as well on Friday as well. So in about midday. So if you're wanting this to go up, if you're wanting this to continue going on forward, and I see people calling for like $50, $100, things like that, that is your level that you have to break. So you have to break that $16 with some volume in order for this to continue going further up. Now, if you're short in this and you're taking the hedge fund side and what have you, this is this bottom level right here around this $11 is where it needs to get below in order for it to stay below and for it to go back where it came from, back towards this $4, $2, range that it was before. So those are your areas of interest. If you want it to go up, it has to break this $16. If you want it to go down, it has to break this $11. Anything in between is a coin flip on the which way it's going to go. All right, so that's the first part. Those are your areas of interest that you have to take notice of when you're trading it this week, okay? Now, the second part is that with the options, I want to show you this implied volatility open interest on the options. So this is the option chain for this week, right? So I think everyone is familiar with the term gamma squeeze now and how the gamma squeeze works. Well, here's the thing. So right now, as far as the open contracts that are on AMC, right now there is a lot of open interest right here at the $20, and then there's also a lot of interest of $40. So you can see $20 right here, and then $40 right here. There's 32,000 contracts open at 20, and then there's also 46,000 there at 40. So for the short squeeze to go ahead and continue, the stock price would have to get over $20. So I know I just said where on the chart it has to get over 16, right? That's the breakout point. But in order for you to continue the squeeze, for it to go any higher, it needs to get above 20 around in these areas where those open interest of those contracts are. So what that will allow to happen is if those sellers of those contracts, if the price gets above those sellers of those contracts, they're going to have to buy those shares of the actual equity in order to make up the loss of these contracts that were sold. So there's also a little bit of higher interest as well. If you take a look at like the 15s, so there's 26,000 right here also at the 15s, And then there's also right here at the 25, there's 7,000 contracts as well. So in order for you to have the momentum to continue going forward and continue with the squeeze and continue with the gamma squeeze, you would need to get above around $25, and if not, also $20 for those for them to start having to buy those contracts back. This is really important. This would have to happen on Monday or Tuesday for the price to get over those levels for it to continue going further up. Now, I don't know how many of you are aware of this, but whenever you buy a share of equity on the market, it's called T+2 in order for it to settle. So basically what happens then is it takes 2 days in order for the transaction in the background to go ahead and clear. So you will buy the share and then you may close out the share at the same time, but it takes 2 days in order for your broker to go ahead and send the money to the clearinghouse and get the actual stock back. And then it shows as a realized gain, right? So if that doesn't happen, then what's going to happen on Wednesday or Thursday is that they will start restricting the shares again, because the broker is not going to take the unnecessary risk and is going to owe too much money, because there's too many people that are taking one side of the trade, too many people taking the long side of the trade. The broker's not going to take the unnecessary risk like they did this last week. They're going to start restricting it again. If the price cannot get over the $25 and $20, then they're going to start restricting the price again. So the squeeze portion has to happen on Monday or Tuesday, or else they're going to start restricting shares and restricting trading again. And then you're kind of out of luck. You can't buy any further. You can't push the stock up any longer, because they're going to restrict the buying to it. Another thing I want to point out is this short interest here. So this is I don't know how to say his name. I think it's Eor Dusinsinski over on Twitter. So if you guys want to go follow him, he owns a company called I think it's S3 Analytics, and they're giving real-time short interest updates on these on GME and AMC and things like that. So right now, AMC short interest, this was from Friday, so 384 million, and then 44 million shares that are shorted, 15% of the float, and then the short interest of the float is 11.32% of the fee. So on this here, so the shorts are down right now. So the shorts are down, and the thing is that the original shorts that were in this, they've covered a lot of those original shorts have covered, but now there's a new set of short sellers that are in this trying to make money on AMC, going back to a mean reversion and making money from that side. So this is not as big as short interest because of the 15%. Like on GME, it's not that big of a problem. They're managing it a little bit better on AMC, but it still could happen. You could still gamma squeeze. You could still put these option sellers in a very big bind, forcing the price to go higher. And the last part I want to go over is, and I can't put this and I can't really show you while the market's off, the sheer volume on AMC trading here, guys, is absolutely just nuts. So like within the whole week, this is, I think it was 3.3 billion shares that were traded. On a daily basis, it's well over 500 million. One day it was over 1 billion. So if you take a look here, if you go to the daily chart, you could see this was the billion day right here. You could see in this volume, when I go ahead and highlight it, it was 1,200,000. And then each day over that is over 500 million. So what's happening now is that you have a lot of hedge funds, and not only just hedge funds, but prop firms, and everyone around the world is watching this now, where if some of them have algorithms that are trading for them. So high frequency traded algorithms that are basically trading the bid because of the liquidity that it's presenting. And it's making it absolutely hard to go ahead and trade it as if you're a retail trader, right? So if you're someone that is just with an app in your phone, or even like me, I'm a little bit more professional. I have, more professional tools, but it makes it a headache whenever the sheer volume, and you can't necessarily tell in which way that these algorithms are going to move the price. So it's basically like a standoff between all these algorithms that are actually fighting within themselves. And it makes it really, really hard in order for you to get a good read on which way this is going. So what I'm saying is you have you have your areas of interest, right? You need to be looking at $16 to the upside, $11 to the downside in order for one of those two to break to give you a trend direction on which way to go. And then once we break those, that'll give you a pretty good understanding of which way the ticker is going to go. And you also need to keep track of the price in relation to this open interest right here of these contracts that are open for this week. At the price starts getting over those levels, yes, we may start squeezing where those option sellers will have to buy the equity to go ahead and hedge against the contracts that they sold. Then you want to take a look at the short interest and the algorithms that are involved and make an informed decision on which way you're going to go. The very most important thing, guys, please take this with as much as possible, with as much importance and everything. Please only invest money that you're able to lose. Please don't go put your rent money. Please don't go take a loan or your life savings or anything and try to put your money into a ticker like this. I have seen it before on the marijuana bubble. I've seen it on the crypto bubble where something pops off and then you just lose. I had a best friend that bought like 7 cents away from the top on BPTH ticker a few years ago, and he lost a shit ton of money. So like, please only play money that you're able to lose and just consider it gone once you put it into the market, okay? Make sure you guys are staying safe. I wanted to go over this, make sure I give you some points to keep in mind. I want this to go to the moon just as much as you guys. I love seeing you guys. I love seeing all the Redditors. I love seeing all the memes and things like that of you sticking it to the man. This is why I named my company New Age Wall Street, for kind of the same thing as Wall Street Bets. I wanted to be able to stick it to the suits, to the man. And we are the new age of Wall Street. We are the new age of traders that is coming about now. We have the tools and the know-how in order to be able to trade effectively in the market. So please trade safe. I hope this helped you out, guys. Make sure you leave me a like and subscribe, and we'll see you guys in the next video.